So what's up guys, it's your boy here again on YouTube, the Tiger Team. Uh right now I'm just going to be talking about how you can bounce back from drawdown and guys, and also how you can bounce back from a losing streak. Because as you all know, I trade funded accounts and the drawdowns. Even on personal, on a live account, you can be in a drawdown, whether you're in a position or maybe your your current equity is your current equity or your current balance is way less than the initial balance you deposited. So for the past, let me just show you in our channel. For the past, for the festive season, for the 2 months in the festive season, we were not trading. Let me just go on when I put the message. I think it was December. Right, was the festive season was not right. Here's the message. It was on 11 December. I told them currently the markets are being brutal for the festive season and summer season. That is December and January and also June and July. I won't be providing signals until I find an edge on how the markets will be able to trade in such holidays. Wouldn't want to be experimenting with your what? With your accounts. So that is well, right? That is all well and good. That I did not want to experiment with what with people's what accounts, right? The funded mix was also telling us that there is what there's a bit of unusuality in terms of these major holidays, festive season and the summer holiday. So I didn't want to experiment, but what I did wrong is personal. I then stopped trading because I was no more active in the community. I was just like, I just relaxed. And the war of December, the war of January, and a part of February, I was not trading. Right? Not only providing signals, I was not trading personal, right? Of which I had said that I'm not going to be what? I'm not going to be trading the I'm not going to be providing signals, but personally, I stopped what? I stopped trading. So, fast forward, going to what? To February. This is what happened. I started having loss after loss, like about 6 to 7 consecutive losses, of which for someone who will be risking 1%, if it is a funded account, right? If you have 6 losses, if you were not in profit, you have 6 losses, you're already 6 out of 8, almost for you failing that challenge, right? If you have about 8 losses, you've already failed that challenge, risking 1%, because my account, they don't want me to what? To breach 8% of the loss, of which that is not realistic for someone who is already a profitable trader. But it is realistic in this situation because now I had a long time without being in the markets, without being active in the what? In the markets. Therefore, I just what? I just couldn't just jump straight in. First of all, if it could happen, I was supposed to first of all get straight into the demo and start being familiarizing with the markets and how the markets are now moving, because the markets are dynamic, guys. And as for so my first advice is that never ever get time off the market. You might say I'm not trading, yes, but just go and look at the charts here and there, how the prices are moving, how you will be entering. Even if you don't enter, you just analyze the market and simulate in your mind, right? This is what I was going to do if I was going to trade without getting in the trade, right? And second of all, if you have that long time without being in the market, don't go straight into a real personal account or a funded account. Why? Because the first trade is going to be a loss. That's how it is. The first trade is going to be a loss. And exercising emotions, revenge trading, like some of those things you might have forgotten them a little, right? You might start being aggressive and so on, but that's how it is, guys. You shouldn't just get straight into the real account after that. Then let me just show you on the live account. Yeah, not these massive profits which were before. Yeah, this one. This was the first trade, gold, because I was risking about $120 on this trade, right? I was risking about, so there will be 4 positions. As you can see, it was a loss. So this is the first loss. The second loss was on GBP USD, right? This one, I think the GBP USD and Euro USD, this one I just wanted to execute because on Sunday's next there is a certain time period, because I do not trade for a long time. There's a certain time period when they say your account has been inactive for a certain amount of time. So I just wanted to avoid that. Then move on. Euro USD, the official trade, which has a total loss of 42. It was about 42, 43 bucks, because I was risking about 0.5% of the around 0.5% of the account, and it was a blow again. Then I saw that, this is not working out. I stayed on a break and then started putting those small trades, the $2, the dollar trades, the $8 trades, just to make sure that my account is active for a while. Then I came back. This time it was a massive hit, right? Because I was now risking my original position which I risked. It was a massive hit. By the way, this account, I think I raised it to almost 100. It's about 90 something percent of the profit in total, like overall all the profits of the account, like the all-time profits of this account. It's a 10K account and the total profit is about 9 point something. I shall show you going on our funded next website. So this was 4 losses in a row, and we have another 3 losses in a row, which I just showed you, which is about 7 consecutive. It's called a losing streak. And after this, what a person is supposed to do, they have to reanalyze their strategy, right? I went back, I reanalyzed my strategy. You just see the markets are dynamic, right? You don't even need to change the whole strategy. As you can see my chart, what I still use it, but maybe with some few additional concepts, right? I still use my trend lines, I still use my 3 EMAs, I still use these psychological levels, I still use demand and supply zone, which is marked black, maybe a different color, but it's still demand and supply, which I still use. And then I just added on a previous day low and previous day high, just for daily buyers, right? Putting that into consideration, that's when everything changed, right? After that, I just had this loss USD which was a 131, as you saw right here on our execution platform right here. Then soon after that, I went into this trade using that concept of the PD GLE concept. I took this trade, which was Euro USD. I took a 1:3, right? The position is marked to 1:2.5, but it was a 1:3, risking about 70 bucks to gain 210, right? And as you can see, it was just so perfect. It was to perfection. The trade, it's still going, it's still running in our direction. Like if someone was to hold it, especially the scalpers, they were running for about 1 to 7 trades, right? Just opening it on Wednesday and closing it today on what? On Friday. Then you get risking 1%, then you get 7%. You could literally pass a funded account in just one trade because of this trade. Secondly, then I went on what? GBP But this one I did not trade it personal, but I gave this signal on a live session yesterday on Thursday, right? It's also running about 1 to 6 in profit right now. As you can see, it's running about 1 to 6 profit. If someone is a swing trader or a position holder, this is just intraday trading because it was yesterday at 2 and right now it's about 5 p.m. So it's little above 24 hours. It's somewhere around 27 hours, and then you close your trade. It's not much of swing trading, right? On gold, seeing that it did not break out of the previous day low and previous day high, I was confirming that it is going sideways. We did not execute there, and loss avoided because we're anticipating for what? For upward direction. So just as it is, just do what you think. Just do as according to plan. Don't try to predict the market. Just react in action of what the price is doing. React to the price action. Don't try to predict where the market will be going. Then after that, we had the GBP JPY. This was a massive loss. I personally closed it before it hit my stop loss, because I saw that after 12 hours it was no more going anywhere. It was just going sideways right around that level. So I just closed it. I think it was about $5.6 loss, and it's just a break even. I closed it at break even. Then USD JPY, this one again I gave it on a signal, and I traded it myself. I gave it on a signal yesterday on our live session on here, right? Using the same concept, breaking out up, we are now on our psychological level, which is the area of interest. Bouncing on our EMAs, enter a trade, breaking out of the psychological level, then we enter our trade. It hit massive 1 to 2 risk to reward. So that's how it is, guys. So just after a losing streak, you just reanalyze, because the markets are dynamic. Just reanalyze, see a little concept you can add on your strategy. After a massive drawdown or after a huge break, don't go straight back into a real account. Don't go straight back into a live account. So all this, I'll be doing it with my channel, right, as I showed you. For yesterday, they got into our live channel, and I gave them the signal for EURUSD were already on the trade, so I did not tell them to enter again, but they could have entered, since there were some areas of interest which people could have capitalized, especially on this breakout of our psychological level. People could have capitalized, but by that time the session had ended. The live session had ended, and this is 4 a.m. It was before live session. This is 3:30. It's about 5:30, which was time when I was already the live session here had already ended. So only when we were on the live session, I just gave predictions. GBP USD, I told them to take a 1 to 3 risk to reward trade. So it was a massive 3% gain, because I encourage my community to risk only 1% per 1% of the initial deposit per trade. So this trade, it went for 1 to 6, but if a person is a swing trader, they would have holded, and today getting there around 1 to 6, 1 or 1 is to 7. But it was a 1 to 3 trade on the signal, same as Euro USD 1 to 2.5 on the signal, and then USD JPY 1s to 2 on the signal, and massive profit here. And I showed them what our summary was for the weekly summary for how the signals perform. If everything should be transparent, right? Because GBP JPY, because Euro USD was a 20 around 24 pips stop loss, right? And I said it was a 2.5 trade. That's why it is written 2.5. Since it was a 2.5 trade, that's why I wrote 62 pips in gain, but it is now way more over 62 pips. It's about 120 something, right? And it is going for a massive 1:7, right? But according to the signal, what we gained according to the signal, not according to what people may do. Some people may choose to hold, some people may choose to get out of the trade early, and they may not even get the 2.5%, they may get the 1.5. But according to the signal, every person was supposed to get a loss on Tuesday on USD JPY, which I showed you, which was a 1% and only minus 1%, and then a gain of 2.5 on Euro USD on Wednesday. GBP JPY, because it went 1s to 2 up, and then it broke even because we put our stop loss in break even every time when a trade reaches 1s to 1. So when it came back after reaching 1s to 2, it hit the break even. Then we re-entered that GBP JPY trade, right? Then it got up to 1.5, right? And then USD JPY, the last one which I showed you, 2.5 gain, which is a total of 5.5, an average of about 2.25 if a person misses 1 or 2 trades, right? So everything is just so I was just clarifying to them. This is the loss which I was showing you on, which is 4.69. I told you about $5 loss on our break-even trade and 210 gain on our Euro USD, and going downwards more profit. So this is how it is, guys. Until next time, guys, peace out.